Welcome back, awesome people. And if you have not checked out my new swing trading series where I am on a journey of swing trading $100 to $1,000 in my Wealthsimple trade account, so please do that, as I have chosen 3 penny stocks with incredible growth potential and a YOLO stock where I have no details on what the company does, just a YOLO stock to see where it will take me. So check it out. While we are on the subject of penny stocks, 2021 will be the year of the penny stock. Out with the old, in with the new. Old metrics and patterns to value a stock are out the window. The new metric is what's in, what's cool, what's in the hype, and what will make me money fast. This metric of valuing a company to decide whether or not to invest in is not totally brand new. It is just more widespread now as everyone and anyone has easy access to the market. 50 years ago, stock market hype was built around word of mouth from your neighbor and coworkers, which would make many get into the market, but it would not fluctuate the market as heavy. But now, with social media, hype around a stock can be built in seconds and can reach millions of people and can make the markets fluctuate very heavy. So for those who are not looking into jumping in and out of hype stocks to make a quick flip and are looking to be more of a passive investor where you put your money in the market and let it grow while getting a monthly or quarterly payout in the form of dividends, then this is the video for you. So get bullish on that subscribe button for the YouTube algorithm and smash all the likes, bells, and whistles to help out the channel grow and to get all my updates on these fantastic investments, and comment below with what you think. I do reply to every comment. Also, all the information I present in this video is from my experiences and what I do based on my research. So some things I do may not be what every investor does. So make sure you do your own research and due diligence, as I am not a financial advisor in any way. So I am a heavy dividend investor because the majority of my investments are long-term holds. I enjoy swing trading as a fun hobby to sharpen my trading skills, but I am not looking to get wealthy from swing trading. So I will share with you 4 indicators of choosing a strong and reliable dividend paying company. First, when dividend investing, do not simply look at the dividend yield percent and choose the highest one. Because if you buy a company solely based on dividend percentage, then you won't know whether there is a dividend cut coming up or how much debt they are in, and etc. So do not focus on the dividend percentage. I personally go for an average of 5 to 7% dividend yield, and it is not too high or too low. And if a 50% dividend cut were to come down the line, for example, it will still be an average yield of many other companies. So for the average company, a 3 to 5% yield is healthy. For me personally, I go for a 5 to 7% dividend yield. Second, look at what the company does and the impact it may have in the future. This will show you if the company will be around for the long future or left behind because it is not willing to adapt. Will the goods or services of the company be needed in the future? For example, an online retail company will have a better chance at survival than a department store. And great examples of these types of companies that have geared up for the future, and I don't think they'll be going anywhere anytime soon, are companies like Costco, Walmart, McDonald's, Johnson & Johnson, Kimberly-Clark, Microsoft, just to name a few. Because remember, a dividend investor's main criteria for choosing a company is its longevity. How long is the company going to be around for? The longer the company exists, the longer you will be paid a dividend. So check these companies out if you want to put your money somewhere and check back on it in about 10 years, because I'm sure they'll still be around. Thirdly, the share price. The share price matters very little when looking at dividend stocks, because if you are planning to hold for 5 to 10 plus years, does it matter whether you bought it for $26.50 a share or $27 a share? No, because by then the price will be much different, but the dividends will still be paid out. So do not focus on share price too much. Unless you feel that the share price is way overvalued, then it totally makes sense. Don't be a dummy. Because a dividend investor is not a one-time investor. A dividend investor is someone who consistently invests regularly to get the compounding benefits. So unless the company is way overvalued, share price means little to a dividend investor. But the good news is, currently during this RONI season, many great strong dividend paying companies like the ones I mentioned above are still way undervalued. And this is a good time to pick some up, because when society starts to open back up again, these beaten down strong dividend companies will rise right back up before their RONI prices. So you will get the benefit of both the growth profits and the continuous dividend payouts. And the fourth and final factor is to look at the dividend history of the company. Has the company been paying dividends for the past 20, 30 years, or did they start paying a dividend in the past few years? This will help you see if it is worth the risk, because companies with a short dividend history may get overwhelmed by the profit sharing and cut their dividend. So my rule of thumb when focusing on dividend paying companies is to find companies that are considered to be dividend kings, which are companies that have more than 50 years of consecutive dividend payouts, and dividend aristocrats, which are companies that have more than 25 years of consecutive dividend payouts. These companies tend to be strong, reliable, and their goods and services are used regularly by the public. The only downturn is that the share prices tend to be steady, without much excitement and hype, but their dividend payouts are reliable and consistent, and many tend to raise their dividends every year. So it's like getting a pay raise without doing much. So make sure your company has some history and consistency with their dividend payouts.
I've invested. What do I do now? I have my dividends.
Well, when you get your dividend payouts, it gets deposited in your Wealthsimple account. So you can either use the cash to buy more shares of either the same company or a different company, or you can cash it out and go about your business spending. But the beauty of dividends is not just to collect and spend, but to collect and grow. If it's free money given to you monthly or quarterly by a company, by reinvesting it, you are pretty much getting free shares, which will get you more free dividends, and so on. And that is compounding. When you use dividends to buy more shares, which leads to more dividends and buying more shares, which leads to more dividends and buying more shares, and so on and so on and so on. That snowball effect is what will make you enormous amounts of money years down the line. The earlier you invest in dividend stocks and start compounding early, the more you will have when you cash out years down the line. I personally reinvest all my dividends back into the stocks. If I had an emergency or something to take care of, yeah, no problem. I will take out some of my dividends and go about my business. But because I did not sell my shares, all I did was just cash out my dividends. Guess what? Next month, I will get dividends again from those shares that have been sitting in my portfolio. So awesome, people. I know these past few weeks and almost all of last year have shown you how volatile and extremely wild the stock market can be. And this type of trading is not for everyone. Some want to sit back and receive money passively, while others like to get in on the action and watch the markets all day. So if you are one, like me, who wants to sit back and enjoy your day while receiving money without being glued to the markets, dividend investing is the way to go. And who doesn't love free money? If you want free money to trade with and $0 commission fees that won't eat into your profits, sign up with my Wealthsimple link down in the description box below for $25 of free real money to trade with. Don't like Wealthsimple Trade? Maybe Questrade is more your style. You can also sign up with my Questrade QPASS key code for free money as well. You will get $25 when you sign up with my QPASS key code and start trading in minutes. Both links are in the description box below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I go on YouTube Live or of my recent posts, as I will be posting my penny stocks, REITs, dividends, and speculative stocks from my portfolio and investments that I will be buying and selling. Also, check out my recent video of my journey of swing trading $100 to $1,000 through my Wealth Simple Trade app. So subscribe. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride 2021 together on a journey of health, love, success. So until the next video, stay ranting.